No
So
problem.
Daniela Corsini holds a master degree, cum laude, in economics, statistics, and social sciences at Bocconi University in Milan, Italy. She started her career in 2006 at Horizon Capital SA in Luxembourg as portfolio manager focused on equity funds for emerging markets. In 2011, she started her collaboration with Intesa Sanpaolo Bank in the research department, where she manages macroeconomic researches for commodity markets following energy, agriculture, industry, and also the precious metals sectors. Since 2011, she's part of the CFA Institute. In her part of the presentation today, she focuses on precious metals prices under the influence of several factors such as monetary and currency aspects, as well as economical conditions of the most precious metals consuming countries. Now your stage is open for you, Daniela.
Thank you very much. Buongiorno a tutti. Grazie.
Good morning, ladies and gentlemen. Thank you very much for organizing this meeting and for having me on board. I shall be talking about raw material prices, and I shall be talking about our forecasts for 2023. In this slide, you see that I refer to the oil price. An extreme volatility has been recorded over the past year. We shifted from over $2,000 on March the 8th, 2022 to a minimum of $1,615 an ounce in September 2022. So these important fluctuations are something that is quite unparalleled, refer to the different forces at play when it comes to precious metal prices and gold price in particular. What is most important, I believe, is that the US monetary policy, there's indeed a strong correlation between the price of gold and the interest rates in the US. The higher the interest rate, the lower the price of gold. The stronger the prospect for slowdown in terms of increase of interest rates in the US, the greater the price for gold. These fluctuations basically have been witnessed throughout 2022, so the correlation with the US dollar has been the main driver throughout the year. The American dollar is obviously better appreciated when the interest rates are higher, and is depreciated when the market expects that the difference between interest rates in Europe and in the US is greater. So we expect that in the next quarters this correlation is going to play a very important role. Let me add that there are other factors at play when it comes to the price of gold in 2022, and that are still going to play a role in 2023, apart from the correlation that I've been referring to earlier on between the price of gold and dollar. There's the main risk being geopolitical risk. Indeed, the peak that was recorded in March was caused by the war that was perceived perhaps as even correlated to high risk involving a greater geographical area, with the gold again ranking highest. Then there has been a collapse in cryptocurrencies. Cryptocurrencies have been perceived as an alternative to gold in terms of a refuge shelter good, but you see that again after the collapse of cryptocurrencies, now gold is the most important shelter good. In 2022, something happened that might not happen in 2023, and that was the anomaly in the financial markets. In 2022, we saw a collapse of both of the security market and of the share market, something that has never happened jointly in the past. Usually, this is not the case. It only happened in 2% of the cases over the past few years. So this double collapse of both the shares and the security market led to an ever-growing number of businessmen considering gold as the assets where to invest. Here you see how different and diverse the demand for gold is. Many other drivers are pushing people to buy gold. Central bank have been acquiring gold as well. You see that there's been growing demand. It shifted from being 7% of the overall demand for gold in the first quarter of 2022 up to 39% in the global demand for gold in the third quarter of 2022. A devaluation of the US dollar has been recorded, coupled with the geopolitical risks, have led to central banks to buy gold so as to diversify their portfolio and to hedge against the depreciation of American currency. So central banks are certainly going to buy gold for a long time, and especially emerging central banks are going to show a greater interest in gold. As for ETF, well, you see they have contributed to volatility. Indeed, they shifted from being equal to 20% of the global demand to releasing gold in the third quarter of 2022. Here you see that throughout the year, apart from the very last month, there has been a correlation between the price of gold and the volume of gold, as pointed here in orange, as held by ETF. There has been a rebound in the share market and the security market at the beginning of the year, reversing the trend that was experienced in 2022, led the financial investors to prefer buying shares and security, neglecting gold. But we believe that this correlation might change over the next few years. In this chart, you see that there are other investors, money managers and hedge funds, unlike ETFs, are much more interested in following the price of gold. So this part of the demand certainly is very much interested in the prices of gold. Here you see what we expect for the future. So there are a number of conflicting factors to be considered, but we expect that fair value for gold in 2023 should be equal to $1,830. $1,830. Gold hit $1,930, but we believe that this price has been supported by two good expectations on the monetary policies of the US. So we believe that we're not going to see a reduction in the interest rates. So we expect that the price of gold is going to be slightly lower, and we expect an average of $1,830 for gold. Obviously, we have to keep an eye on inflation and on the war between Russia and Ukraine. Here you see that ETF position have been following the trend in gold. You see that basically there is a very positive correlation between ETFs and gold. So there's a strong correlation between the price of gold and the price of silver, and we expect that silver is going to remain stable over the next few months. Unlike gold, we believe that silver is not going to lower a lot. Gold is perhaps a bit higher in price that is going to be, but the silver will remain unchanged because there is an industrial demand for silver, especially for the technologies leading to the green transition and the solar panels industry. So we believe that the price of silver, again, will remain unchanged, some $23 per ounce for the following year. Now, let me refer to palladium. Palladium is impacted by two issues, Russia and the automotive industry. Russia, because, you know, Russia is one of the top producers for palladium, so there's been a peak in the prices in March that was caused again by the fear lest that the palladium availability would be reduced to zero, but for the time being this has not happened because palladium can be sold freely from Russia, so this risk can turn out not to be one to be considered. And then we also have the automotive industry playing an important role when it comes to palladium, especially so for components of green engines. So we believe that the car industry is going to have a growth, and so we believe that palladium may appreciate over the next few months. As for platinum, we believe, as was the case for silver, that the present day prices are going to remain unchanged, $1,100 for 2024 and $1,000 for 2023. Palladium is better coordinated with financial flows. It has recovered the loss is experienced. Here you see estimates for in terms of euro per grams. 52.2 is the price at the beginning and of 2023, and 50 is going to be the price for 2024. This obviously correlates with our estimates on the US dollars. Our colleagues that are following currency changes expect that there's going to be a reinforcement of the dollars with a stabilization at the end of 2023 throughout 2024. Our presentation are available on the website of the organizers. Subsequent updates are certainly going to be available also on the São Paulo website.